Hello and welcome. You are watching Business Today. I'm Neetu Chandra Sharma. Biocon is continuing to invest in its pipeline and manage capital priorities in a competitive global environment. To discuss the company's direction and growth plans, I'm joined by Siddharth Mittal, Chief Executive Officer of Biocon. Siddharth, thank you so much for taking the time out and speaking to Business Today. It's a pleasure to have you on the show. I would like to begin by asking you, if you step back from the quarterly numbers, how would you describe Biocon's current position in the global biosimilar space?
I think today we are at a very exciting point. When you look at the biosimilar space, we are amongst the top five company which has invested billions of dollars in creating a whole vertical integration, not only in R&D, but manufacturing, supply chain, and commercial. And I think that's what is required to be successful in most parts of the world. Today, Biocon is directly present in over 30 countries with its sales force. We, of course, have a very robust pipeline of biosimilars unparalleled to any other biosimilar company. We have a pipeline of antibodies, proteins, and insulin, which again, as a vertically integrated company, there's no one else in the globe which has such kind of vertically integrated pipeline. So I think that definitely puts us in a very, very good position. We have had 10 plus molecules in the market already. And most of our products, which are in the US, have seen a very good market share with two biosimilar trastuzumab and biosimilar pegfilgrastim in a leading position. And more recently, we launched biosimilar ustekinumab, which again is in a leading position. So I think overall, I would say that Biocon is very well placed. And now with the merger of our generics business, we'll be the only company which will have a combination of insulin and GLP, which will address diabetes, weight loss as a vertically integrated company.
So when we talk about the developed markets, particularly the North America, so what will be the next growth triggers for biosimilars in those areas?
See, we have recently launched a couple of drugs such as biosimilar bevacizumab, biosimilar aspart, ustekinumab, and these three would continue to grow because unlike generics, where the market penetration is quite quick, for biosimilars, it does take some time. And we definitely expect these three molecules to contribute to growth in the coming quarters. But apart from that, we also have two more launches coming up, biosimilar denosumab and biosimilar aflibercept in calendar 26, which will again contribute to the growth. And of course, we do have a very robust pipeline in the coming years, so which will continue to drive the growth in the US market.
Okay. In the other market and the overall pharmaceutical industry, a lot of companies are moving from beyond generics to biosimilars and specialty segments. So how do you see the competition evolving in biosimilars going forward in the next 5 to 10 years?
See, if you look at Biocon specifically, we have invested in this space since last 2 decades. And we have invested, as I mentioned, billions of dollars. We have invested in capabilities, infrastructure. Now, any company who's trying to do this today, it's going to take a lot of time and a lot of capital investment. Now, when you look at generic companies, their P&L is already suffering. The margins are suffering, the patent cliff, and some of the recent the genericization of drugs such as Revlimid has put a lot of pressure on the P&L and balance sheet to invest such kind of money. So while, of course, we have seen Korean companies and few companies in the West be successful, but anybody who's trying to enter it today in this market is going to take a lot of time, and to create this broad pipeline will take a few years. So I think over the short to mid term, we are very confident that that there will be no competition at that scale. Of course, at a molecule level, we have seen some of the other companies have got approval who've had a smaller pipeline. So at a molecule level, there might be competition. But generally in biosimilar space, in midterm, I don't see a huge shift in the competitive landscape.
So let's talk about the GLP-1 portfolio. So in the generics portfolio, if I talk about GLP in Europe, that indicates that there's a diversification. So how important is this portfolio mix in reducing the revenue volatility?
Well, Europe is an important market, but North America, of course, from a pricing and volume perspective, is much more significant than Europe. We received approval in the European market. We started launching the drug directly as well as through our partners Zentiva, and we are expecting approval in the US shortly, and we will launch the product in the US as well. And over a period of time, you will see that US will, of course, contribute more than Europe. And while this, when I look at liraglutide as an opportunity, US is give or take $500 million in sales. European market is similar number. But we also, when I move to semaglutide and look at the sales of the innovator Novo Nordisk, of course, US contributes much higher in terms of revenue compared to Europe or other parts of the world. So in a long term, we would expect a similar trajectory like we've seen in biosimilars, where US would be the major contributor, followed by Europe and other emerging markets.
What are the plans for GLP-1 for the Indian market in particular?
Well, India is a very tough market for GLPs because India is the only country which requires clinical trial, unlike most other markets which does not require a clinical trial. So while we have done all preclinical work, we have also completed our bioequivalence trial. We have an approval to commence our phase 3 trial. India already has seen many approvals for generic semaglutide. India is going to be fiercely competitive market from a pricing perspective. And we will develop the drug, but instead of doing a clinical trial, we are also evaluating a Rule 101 approval, which is waiver of phase 3 clinical. If you have an approval in an ICH country, and we are hoping that we will receive an approval in the coming year from one of the ICH country basis, which will apply for a clinical trial waiver, and then commercialize this drug through one of our B2B partners. Because just to remind you, we had divested our branded formulations India business to Eris 2 years back. So we do not have direct presence in India.
So let's talk about the research and development part, moving from the GLP-1 portfolio and the generics market. So R&D continues to be a very significant investment area. How are you prioritizing near-term commercial opportunities and the longer cycle innovation bets?
I think that's a very good question. And it's, of course, you have to balance between investing in molecules which are going off patent in near term versus molecules which go off patent after a couple of years. And I think for us, portfolio choice looks at both the options. And we try and prioritize, of course, the big opportunities or big drugs which go off patent in near terms. And now with the evolving biosimilar development landscape in the US, where the FDA is open to waiving off phase 3 clinical trial, and phase 3 clinical trial constitutes majority of the spends, we are able to do many more molecules in the same budget. So I think that way we have been fortunate that FDA has been open to the request for phase 3 clinical waiver, and which allows us to develop molecules which would have otherwise been budget constrained. So we, of course, are investing in molecules as well, which have patent expiry in mid to long term. And I'll give you an example of terzepatide, right? Terzepatide, of course, not a biosimilar, but more a GLP, but it goes off patent, almost in the middle of next decade. But we have to invest today to be amongst the first in the market. And it does require investment, but being in time on day one is also equally important. So you have to balance between being in the market with near-term opportunities and to be on day one for long-term molecules.
Are you looking for further portfolio expansion and any newer geographies that you are targeting at?
Well, I won't necessarily say that portfolio expansion. We do have a robust portfolio with in both biosimilars and GLP-1s and other specialty generics. And we do continue to look at what is the best way to allocate capital. And accordingly, we make our choices. So there's not going to be any fundamental change in the way we choose our molecules. And of course, our R&D budgets tend to be between 8 to 9% of revenues, and we would look at seeing where do we get the maximum return on investments.
All right. So a lot of structural changes underway within the group. So what kind of operational efficiencies are you targeting over the next 12 to 18 months going forward?
See, as you combine the two businesses, there's going to be synergies in operating costs, in manufacturing infrastructure, in supply chain infrastructure, IT infrastructure, and various other support functions. And of course, those things are being worked out, and we will start realizing the benefit of merger over the coming quarters. I can't quantify the numbers, but it will start reflecting in the P&L in the coming quarters.
Okay, all right. That gives us a very clear view of how Biocon is positioning itself across segments and markets. Siddharth, Mittal, thank you so much for speaking to business today. Appreciate your time, and we look forward to speaking with you again.
Thank you, Neeta.
We'll take a short break, and you stay tuned to Business Today for more corporate stories.
If you like the video, do like, comment, share and subscribe.